Hello traders, welcome to Knowledge Candles. Today is 5th of October 2013 and this is Jaidev Sharma presenting you the second and final part of the RSI trendline break strategy that I presented in a video over last weekend. So today I'm going to just continue the presentation of the strategy. So we will do a recap of the strategy as to how to identify trades, the entry criteria, the stop loss, and the exit criteria. See some more examples of trades in the chart that I pick. And lastly, but more importantly, we will discuss the kind of market conditions in which this strategy is most effective, and also the market conditions where it may not be so effective and therefore you should avoid using this strategy. Okay, so without further ado, let me just go and pull a chart. Okay, so we what you see on your screen is a US dollar Canadian dollar chart. This is what I used in my last video as well, so I'll continue using that. In terms of a recap, first of all, I use an indicator for this strategy, and that is the RSI. I use the 14 period RSI, and this is daily chart. That's my preference. If you are used to using a smaller or a bigger time frame, you could do that. Obviously the flow of the chart and the risk profile will change when you change the time frame. My preference is using this strategy on a daily time frame with a 14 period RSI. Okay. Now as far as entry, stop and exit with this strategy is concerned, so first of all, in order to identify and enter a trade, I look for a trend on the RSI. Okay, so trend on the RSI, which will invariably correspond to a trend in price as well, but I'm more interested on the trend on RSI itself. Okay, so let me just quickly find a trend and then draw that line here. So just take a look at this one here. So clearly, so starting from here, and in fact actually you can consider from here, made an upswing, down, upswing, down, upswing here. So there's a, and it is following higher lows, higher lows, higher high, higher low, higher high, higher low. Okay, for a trend line, the point to note is that I look for at least 2 to 3 touches onto the trend line. Okay, now in order to find the entry, I look for a break from this trend line. Okay, so what I do is I find the corresponding point on the price point when this trend line is broken, and that's here. So this bar corresponds to the break of trend line, and since it is a daily chart and I'm using the closing price for RSI, I will draw a line at the close of this candle, which is here. Yeah, comes out at 1.0288. Okay, so that becomes my entry, and because it is breaking a rising trend line, my entry and my trade will be in the opposite direction, which is a sell trade here. Okay, so I'm taking a trade in the opposite direction of this trade, which is, so this is rising, so I'm going short at this point, and my stop loss will be just above the previous swing high, which is here. Okay, so if I just shade this area, this becomes my risk. Okay, so entry at 1.0288 and stop just above 1.0339, so roughly 52, 53 points of risk here. Okay, so that's the entry. Now for exit, I look at just the opposite trend. So this is how it goes down, and I look at the corresponding trend on the RSI, and I find it here. So 1, 2, 3, 4 nearly, and this is the final touch. Once the price breaks through that, that becomes my exit criteria. So let me just draw a line to show the price point of exit here. This bar corresponds to the break here. So the closing price of this bar, which is here, becomes my my exit. Okay, so if I shade this portion, that will represent my profit area. Yeah, and this aligns to 1.0099. So nearly 200 nearly 210 pips. Okay, so if you see the risk and reward, it's roughly 1:4 risk and reward ratio. So like that, you can find any number of trades. Now remember, it is a daily chart, and therefore in a month you'll probably find 3, 4, 5, maybe 6 trades. But these are highly profitable trades, and if you manage your risk well, you will see that you will be able to find 5 or 6 good trades with 1:4, 1:5 kind of risk reward ratio. Okay, so that's how the strategy works. Now I think coming to a more important aspect of the strategy as to when it works and when it doesn't. You know, all charts will not be similar, and they will not follow similar harmonics as probably present here. Therefore, it is important to know when to choose the strategy and when to avoid. Okay, so because this strategy is based around trend line breaks, it is first and foremost very important to find trend lines. Now if you see that RSI is actually not making trend lines, it is either flat or continuing in one direction, then that is the first signal that this strategy should not be put to use. Okay, so if I pull let me just get rid of these lines. Get rid of this line. So in this chart, for example, you see this particular steep rise here. Okay, now correspondingly, when I look at the RSI also has a steep rise, and there is hardly any trend line because I cannot see more than one touches. Now in hindsight, you would like to think that okay, there was a short position available here, but you know, when you are working with the chart at the right edge, you do not know how it is going to behave. So in this particular case, I wouldn't have taken a trade. Okay, so I would not have taken a trade because I do not see a nice trend line on the RSI. It is just a steep rise, and even if I try to draw a line, there is just one touch here, and on the second touch it is broken. Okay, so this is one type of situation where I would not recommend you to take a trade based on this strategy. And the simple reason is, if you see the movement here, it is so strong that it is very highly likely that it might have followed through. Okay, in this particular case it hasn't, but it might have. Okay, so that's one condition or one situation where you would not put this strategy to use. The other condition is when the RSI is flat. So let me just go back and see if there are. So there is an area here. If you see the area here, there's hardly any trend on this RSI. It is just going up and down within the bands of 30 to 70. Okay, so in this kind of market situation, it's very clear that the market is going nowhere, or it is trending strongly in one direction. Okay, so remember, RSI will go flat only if the market is either flat or it is in strong continuation movement in one direction. In both those cases, I will recommend that you do not use this strategy, because when the market is like that, you will either not find a trade, or if you find, you probably will end up in the wrong side of the trade. Okay, so in this kind of situation, I will not recommend you to use this strategy. So I think just to summarize, it is a strategy which can let you enter a trade at a very early stage of a swing cycle and let you continue with the trade till the very end of that cycle. Okay, so it is highly profitable if entered correctly. The caution points are, if the RSI is not trending, avoid taking trades, or if there is a steep rise without any touch points, without you being able to actually draw a trend line, then I would suggest you do not take the trade. The third aspect is the period, choice of period and time frames. As I said, I prefer it on daily time frame. It actually allows me to trade with peace of mind. I don't have to be watching the screen for break of the trend line and so on and so forth. I can do my end of day analysis and see if the line, if there is a trend line and if it has been broken, then I just take a trade. Okay, and likewise for exit. If you go for shorter time frames, you'll probably end up watching screens. You'll get more trades, but you'll probably end up spending a lot of time in front of the screen, and therefore if your strategy allows you to do that, that's fine. Okay, and the last point is about the risk factor. As you can see, when you are dealing with daily charts, the stop losses are typically a large number of pips, but you have to always look at it from the point of view of potential rewards as well. So as long as you can see trades which are 1:3 or more, I consider them as good trades. Okay, I think when it comes to the size of risk, it does not matter how many pips you are risking. It always is dependent on the percentage of your risk portfolio that you're risking on a single trade. So as long as a strategy presents a high probability of either winning trades or high probability of risk to reward, I think it is a good strategy. But finally, before I close this video, I have to say that there is no strategy which is a holy grail in the world of trading. Okay, therefore you have to pick your strategy and your plan according to what works for you. This is just one of the strategies. It may work sometime and not on others. Okay, therefore you have to pick up a strategy and balance your probabilities and manage your risk well. Okay, so with that, I close this video. I hope to see you soon in my next video. Until then, good luck and God bless you. Thank you.